Good morning, everyone. It is Thursday, December 16th, and this is Morning Market Movers, where we do live analysis for day trading. My name is Todd Rich. I'm with Nadex. With me is Brian Caprice from Keep Trading Simple, and we do have quite a bit we want to cram in here this morning, and we've got 15 minutes to do it. But what we are going to be doing, one, we're going to be looking at a recap of what's gone on in the equity markets, and then we're going to be spending a bulk of the time today in the FX markets, particularly over there with the pound as well as a bit in the euro. Why are we looking at the pound and the euro? It's all about FX. If you didn't catch it, we've got all of the big news. The Bank of England, the UK surprisingly raised the official bank rate from 0.1% up to 1/4%. First major central bank to do that. Central bank to do that.
Second.
A
New
second
Zealand
one.
was first.
New Zealand was first. New Zealand was first. Thank you. The ECB holding their main refinancing rate at 0, not giving us a lot there, but seeing a little bit of strength in the euro. But then, of course, yesterday was the Fed, and holding the Fed funds rate at 1/4% was not the surprise. We knew that was going to happen, but what we really got was some clarity out of the Fed on what they're looking to do and how quickly they're looking to taper, and then opening the door for 3 interest rate increases. I and Brian and I were going back and forth. I interpreted it as 3 interest rate increases next year. Brian just said no, it's a sort of a door that's open for 3, but we're gonna talk about that too. So there's a lot going on, and a lot of the volatility in the action is in the FX markets with all the central banks, the European Central Bank, the Bank of England, and the Fed here in the U.S. all getting at it to curb inflation. Before Brian and I jump into it, I do need to share the disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, Brian, I'm going to flip it over to you. Let's do that quick recap on equities, U.S. equities, because we did get that bump yesterday. We're seeing a little bit of it today, but then let's really get into the FX. That pound market is, and maybe even a bit into the euro.
Yeah, I mean, yesterday, like I said, a lot has happened in 24 hours. Yesterday morning, we were talking about, watching, obviously FOMC was going to be what everybody had on their mind. Oil's data yesterday was a huge surprise. I don't know if you guys saw oil or not. We had talked about API coming in at minus 0.8, and it came in at minus 4. It was a huge miss by the API. And again, oil took a big spike, and again, dollar CAD reacted to it. One of the things we mentioned yesterday morning was how much of this was going to already be priced in what we saw. And kind of really pretty much everything. I mean, they held it. They said everything we thought they were going to say, and the market rallied. Reason why was because all the price action happened before it. All the, it's going to be negative. They're going to cut. They're going to do this. All the price kind of positioned itself ahead of time. So everything we talked about, going the opposite of what you would assume to do was the right call yesterday. So just in reviewing those, you can see right here. Here's where the FOMC statement came in, and you can see volatility was high, which you would expect. And then immediately, as soon as the statement happened, it crashed right back down again. So it was very, very fast. And in all the indices, they had the same exact move. Take this one here. You can see news coming in. Again, we're leaving these black lines on as far as psychological levels go. This was a target. That was the target for the long, and you can see it blew right through the top. But we were down at 4,600, and you can see right here there happens to be a spike. We had a level of basing sitting right on the 4,600. Right when the news came out, what did it do? It went down and grabbed that psychological level, and boom, it was off to the races. We mentioned rising interest rates should crush. Tapering should crush, but the reality was that the market had already priced all of it in. So everybody that was waiting for the FOMC to say those things got in trouble with their shorts, and literally, boom, off to the races. Again, it wasn't anything super aggressive that they said. It was kind of like, yeah, we need to do this. Everybody's on board. We're going to do this. And the response was, okay, this is exactly what the market already had planned. So again, if you got stuck in the emotional aspect of it, again, that's 100 points almost instantaneously. That's very, very fast. NQ also had a very similar.
Some of it, I mean, even all this is we there's uncertainty. Whenever there was uncertainty, that's when you see volatility go higher. People aren't sure what they're actually going to say. They've got some ideas. People are talking about what they think is going to happen. You see risk off positions where people sell going into the announcement because they just don't know what's going to happen. Then when the announcement comes out, it almost doesn't matter what they say. The fact that it reduces or removes a lot of the uncertainty, removes a lot of the conjecture, removes a lot of the hypothesis. Hey, here's what we're going to do, and they broadcast it. That comes out, people get more comfortable, go back into risk on, and you see buying. So it's not an uncommon phenomenon, no matter what, just to see people buy when that happens, just because the uncertainty is removed. So
Yeah. Yeah, and like I said, this one was all set up ahead of time. I mean, here's NQ, YM, same thing. It had a spike down. Unfortunately, the YM did not grab a level, and Russell had the same thing. It was sitting right around an area that we talked about yesterday, and it had formed a new base right right beforehand. And again, easy way to find this is what the dollar did. Remember, all the interest, what they're doing with the economy really has nothing to do with the stock market whatsoever. Zero, none. They don't care. That's not what their focus is. You would think that it's most important. It's interest rates. Interest rates are more of a currency thing. Seeing that the dollar was spiking up into a level, and again, I always get this question: how did you draw that? Well, I mean, here's the last time we had a peak, we had a retest, we had a gap down again, and then we had the price all the way back on November 25th. Try to touch that level and got hammered down very, very fast. That's exactly what the price did yesterday, right at 2 o'clock. It was literally running right into that area when the announcement came in. Seeing that, again, everybody knows rising interest rates is a strong dollar aspect. The market priced all of it in ahead of time. So everybody that was waiting to be able to go long the dollar, as soon as they mention taper and interest rates, that's where people get into problems because they're trying to time the market based off of something that they're hearing. But the market knows that. The market's smarter than people. And again, this was the big telltale sign with the dollar rising up into an area of sellers before the news release, watching all of these hover low. And we mentioned it yesterday when all the, everything they said should have crushed the market. But when the market moves before the announcement, all it is pre-positioning by big money to take advantage of people that are in a reactionary stance. Okay, now you've seen the dollar has basically been blowing up since that time because, again, it was already priced in, all the rally back up again, and they haven't actually raised any interest rates, so there's no fundamental change. That led us into, and again, we mentioned last night, there was also a great Aussie data last night. And if you look, Aussie also blew it out of the water. Again, supposed to be 5.0 versus 5.2 came in at 4.6. So, 366,000 new job hires versus 203 last time. Again, another opportunity out there, using your calendar, finding opportunity. Yesterday, we mentioned the pound. We said that, listen, there's a whole lot of services data. There's a whole lot of manufacturing data. And the one interesting trend from all of this, taking it, because again, not everybody understands all these things, services down. Flash services in the euro, down. Flash services in the pound, down. French flash services were up. And then again, we have our services. A lot of those lockdowns that happened, now we're seeing it over here on the services aspect things. But looking at the bank rate, told you yesterday, 7 a.m., absolutely awesome time to trade. Did I know they were going to raise it? No. But did I know yesterday that their CPI came in at 5.1% versus a 4.8%? Yes. Does this force your hand? Yes. Are we having that in the United States right now? Yes. Is every country having it right now? Yes. So is it easy to telegraph when we're looking for these opportunities? Absolutely. Let me drag the Nadex platform in real quick. And I just want to show you some things, but we only have 6 minutes to show you these. Again, we talk about short duration contracts. The measuring tool, unfortunately, does not work for currencies because it doesn't go that many decimal places over. Here's the 2-hour call spread, right? We were sitting just outside of the money right before the news release.
I'm going to just drop this in because you can actually see it. This is oh wait, were you in the call spreads or binary options? I'm sorry.
I was going to do both real quick, but yeah, okay, call spreads up right now.
Okay, sorry, call spreads first.
There's the call spread. 30 minutes left remaining in there. We know we had news. It was sitting out of the money. Do you think it was expensive? No. Is it through the top? No. But again, we know how big of a move this is looking at, the pound dollar over here, right? Total in that short time period of time, it was about 85 pips. So yeah, you can tell how big that one is. Looking at the binary contracts, again, I was like, yeah, I'm sure these things don't exist. In the short duration binary contracts, the 7 9s, oops, I'm on call spreads still. I was like, wait a second. Call spreads, binaries, Forex, pound dollar. Where are we at here? The 7 9s.
The 7 9s.
You can see they're all down here. So again, here is the at the money, right? That's right before news. This is 1, 2, 3, 4 positions above. You can see we exploded it, right? We can't unfortunately use the 9, right? Because the 7 and 9 would have been fine. But had you used one of these, you could have used the 8 to 10, right? The 8 to 10s were in there, and you can see kind of the same thing. Price was down here. Unfortunately, this one is kind of harder to trade, right? But we're well at the top. Using the dailies, you could use the 11s. Any single one of these, you can see how many strike prices that literally jump past.
Yeah.
Again, we knew there
the
was
7 to 9s were timed perfectly for that because the event it was happening right in that window, which is what you're seeing here. These are about to expire here, and these are going to settle in the next 5 minutes.
2 minutes. Yeah.
So
4 minutes. Sorry.
Right, in 4 minutes. But because of the time that they were printed and we listed them, it was set up for that news release at 7 a.m. for you to capture a better movement. And that was really where the opportunity was. In those again short duration binary options right before the event.
Yep. And then same thing, you can go across to the euro. And the Euro's release was, the total was, let's see, Euro release was 745. So yeah, it would be the same thing. We wouldn't be able to use the 8s on that one. Kind of the same thing, click on any of these and you can see the same idea, right? I mean, here's Euro at 7 o'clock and then here's at 7:45 right here. So 1, 2, 3, 4, 5, 6, 7, and we're well above. So, I mean, in a situation like this, when you have a couple minutes and again, you get $18, $20 risk, it blows through like this. Would you take it off early? Probably not. You just let it expire. It's got 3 minutes left. It's so far beyond.
At this point.
Yeah. I mean, but even when it spikes up, it's kind of like, do we take it? No, I mean, we're so far above at that point. I mean, the reality is this is one of those ones you hold with, like I said, $15 to $20 risk. Take it out on the other side for $80 profit. Again, it's about understanding the calendar, going back. Everybody thinks it's about what fancy indicator they need or what strategy they need. This is the key, guys, to trading. Go over here and look at these economic calendars. I mean, there's no easier way to telegraph this. Seeing yesterday that, oh my God, look at this. This is huge. And like I said, Jamie Dimon said this. They're going to have their hands forced. And this is why their hands are forced. And again, the United States, remember a month ago, they were like, we don't want to shock it. We don't want to go too fast. And yesterday, what did everybody say? We need to accelerate tapering. We need to get it done quicker than we originally planned.
And 3 rate increases. And probably relatively, in Fed speak, short order. I mean, I definitely took that as 3. I think that is 3 in next year, but
I think it'll be June. And I would actually be willing to wager that it's not going to be 3. If we continue to accelerate inflation the way that we have, they're going to have to double. It'll be 2 raises, but the first one will be a double. So instead of just going from where we are right now up to, a 25-point basis, I wouldn't be surprised if we go with 50. Again, the question is when we see 1 or 2 more CPI and PPI numbers go there, that's what the market's going to assume is going to kick in. But right now, as I mentioned, guys, it's a battle. Every country right now is at the we need to raise interest rates. How do you find those opportunities? Go here and look for them. Look for all the monetary policy statements. It's very, very easy. You can get alerts on it. And same thing. Look at dollar CAD, 110 pips down right now. Why? Because we know all the data. It's not like Canada's at 0, nothing, no news, 0. Oil literally is at 0.05%. We had the spike yesterday. It's not doing anything. It's
if we're doing dollar CAD, let's do, because to wrap it up before we call it a day here, because obviously the FX markets is where we're going to see the volatility, and we know we're going to see some movement in the indices as well. It was kind of interesting yesterday how we saw that explosion, but we'll see. Maybe we get a rollover. But let's take a look at oil, because oil has been, and that's right there on the Canadian dollar. It's a perfect way to transition over to one more.
This is the oil right now.
Yeah. Okay. Oh, good.
Yeah, I switched over to oil. Yeah, I mean, oil's been pushed back. So, I mean, the Europeans really haven't done much with oil today. I mean, there was a high and a low right there. I mean, there's our 8:30 window right here. And you guys can see, there's where oil opened. There's where oil is going to close in the European session. So typically in the U.S. market, what do we see? We tend to see oil rallying more in the U.S. market versus the opposite, right? Europeans tend to send it down a little bit. With that said, what did we just say? I mean, what did we just see? Everything's good. We're rolling through. All the manufacturing looks great. Manufacturing, wonderful here. This came as expected. And again, flash services, demand is back on. So what I would say today is, could we get this to 72, 73? 72 may be hard to get through. There's a little bit of a top in here that I would watch out for. But besides that, if we clear through that level, Could we hit 73 by the end of the week? I think it's possible. I definitely think it's one of those things we got to keep on our radar. But right now, being at 71.32, the question is where the U.S. buyers step in and drive higher. With the VIX down right now, VIX being very very low, everything right now is in the green, and they're all pulling back right now off psychological levels. And a lot of this is resetting the day again, resetting the European session, all the profit taking that's going to occur. Question is if we can find buyers today, will this continue to drive? Or again, like I said, you're seeing all of them kind of rolling, looking for buyers, but we are stepping back into areas where again there's buyers here in 30 minutes. Could this be a short? Yeah, short would be a break of 16,270. And again, a bounce on the other side of this one would be, again, coming down and starting to kind of put a new bottom in, and that would be a break of 16,320. So very interesting open today is set for the indices as well as oil today, because those indices, if they stay green, look for oil to surge.
Perfect. All right. Well, that's a lot. I mean, we did talk about a lot. If there's any questions for Nadex, please email us customerservice@nadex.com. Any questions for Brian, email Brian at support@keeptradingsimple.com. We did talk about a lot today. We talked about the Bank of England raising their official bank rate. Surprise. I mean, no one was expecting it, but we knew it had to be coming at some point. They went from 0.1% to 0.25%. We had the Fed yesterday opening the door for three, not only just telling us they had to taper faster, but then opening the door for 3 hikes. Depending upon how that manifests itself, we're going to end up seeing volatility there. And then we did see the equities, the equity indices. Everyone was in a risk off yesterday, waiting to hear what the Fed was going to say. Once the Fed puts it out there and people hear it, they digest it, that uncertainty is removed from the market. And we saw an immediate reaction in the stock market where everything took off. We're seeing a little bit of a continuation of that today. The question is on people who took advantage of that opportunity. Do we see them doing a little bit of profit taking here at the open? But it's the stock market and the economy, two separate things, even though we often link them. And so we end up seeing a lot of the economy and the economic numbers impacting the stock market. Meanwhile, over in the stock market, companies are still making money and doing really well. The question is with the inflation, is that going to continue, or are consumers going to start getting too fed up with higher prices? So it is all linked.
We have credit cards for that. We don't have to worry about that.
Right. Oh, I'll pay for it
It's the
another
United
day.
States. Just put it on your credit card.
I'll just
It's okay.
borrow it. Yeah,
Yeah.
Lord.
Yeah.
Yeah, I'm trying to avoid that whole that whole fiasco, because it just doesn't
Yeah.
end well.
Mhm.
With that, Brian and I will be back again tomorrow morning. I know we are coming closer to the holiday season. We will be here next week, Monday through Thursday. Friday is a holiday. It is when the Christmas holiday. But Brian and I will be here Monday through Thursday of next week. We are going to be taking the last week of the year off. Between Christmas and New Year's, we're going to be checking out a little bit, but then we're going to come out of the gates guns blazing right after the new year and get back into the swing of things, because I anticipate volatility will really pick up and trading activity will really pick up once everyone gets a chance to take a break during the holidays. With that, Brian and I will catch you again tomorrow morning. Thank you for joining. And if you're new to us, please be sure to subscribe to the channel, and good luck in the markets.